In China, the first week of October is celebrated as the Golden Week. It commemorates the establishment of the People's Republic of China. The week-long holiday period is marked by billions of Chinese people spending billions of dollars on domestic and international trips, shopping and other leisure activities. However, China's economic woes have dampened the usual festive spirit and fervour. According to a Goldman Sachs analysis, the 7-day public holiday that ended on Monday recorded about 2% less spending per domestic trip compared to pre-COVID-19 pandemic levels. Analysts say Chinese people have become more cautious with their spending. They are opting for more affordable options, whether for travelling, shopping or other activities. This consumer trend has severely impacted one particular segment, the luxury brands. From Gucci to Louis Vuitton and Hermès, every brand has been struggling. The situation is so bad that HSBC says that 2024 could turn out to be one of the worst 6 years in the luxury market over the past 2 decades. The year is being compared to 2020, when the COVID-19 pandemic led to a 20% drop in sales, and 2009, when the world was grappling with a recession. So why are Chinese buyers so important for the luxury brands? And what is driving them away today? Will there be a turnaround in the near future? Let's try to find out. For years now, Chinese consumers have been a driving force for the global luxury market. According to Bain & Company, in 2023, Chinese luxury consumption accounted for as much as 24% of the world's total. Their data shows that over the span of 5 years, from 2017 to 2021, China's luxury market tripled in size. For many Chinese, owning luxury items has been a symbol of status and success. But this trend has been changing in recent years. The COVID-19 pandemic, followed by economic challenges, has altered the spending habits of Chinese consumers. With rising youth unemployment, a housing market crisis where thousands of homes remain vacant with no buyers, and a general slowdown in economic growth, all this culminated in the end of the luxury sector boom in China in 2022. Bain & Company's data shows that Chinese economic woes resulted in a double-digit decline in sales growth of luxury market in 2022. While there has been some rebound in 2023, it's still below the 2021 level. The slump in demand for luxury items has continued in 2024, but this time with a new catalyst, the government. Earlier this year in China, a few high-profile internet influencers were banned from social media. The ban included names like Wang Hongchang-king, whom some call China's Kim Kardashian, Baoyu Jiaji and Bo Gongji. These influencers were known for flaunting their wealth online, showing off extravagant lifestyles like luxury apartments, trendy dresses, bags and watches. A Chinese state media platform wrote that these influencers were a bad influence on teenagers, and hence they need to be stopped, and with them the trend of luxury on the internet. Experts say this crackdown, combined with economic woes, has drastically reduced the confidence of middle-class consumers in China. Some people draw parallels with the US during the 2008 financial crisis. At the time, wealthy Americans felt ashamed to show off their wealth. This luxury shame is significantly affecting top brands which thrived in the Chinese market otherwise. It can be clearly seen in their recent financial results. Let's take a look at LVMH first. The French giant is the world's most valuable luxury brand. It owns 75 brands like Louis Vuitton, Bulgari, Dior, Fendi, Tiffany, Moet, among others. The firm's sales growth slowed in the second quarter this year. LVMH says its sales in Asia, including China, fell by 14% between April and June. Many of its competitors also reported similar declines. Kering, which owns brands like YSL, Gucci, Balenciaga, Bottega Veneta, Creed and Alexander McQueen, saw its total sales decline by 11% in the second quarter, with a sharp decline of 25% in the Asia-Pacific region. British fashion label Burberry said that its sales in China had fallen by more than 20% in the second quarter. Richemont, which owns Cartier, saw sales in China fall 27% during the same period. The ripple effects of the Chinese slowdown are being felt across global luxury brands. For years, companies like Hermès, Chanel and Prada had prioritized their expansion in China. They opened flagship stores in key cities and tailored their collections to cater to the tastes of affluent Chinese buyers. But now, as consumer behavior shifts, these brands are facing a crisis. Amid the crisis of slowing consumer spending and growth, the Xi Jinping-led government rolled out new stimulus measures last month. In a rare joint appearance on September 24th, 3 of China's top financial regulators, including the People's Bank of China, announced a series of measures. These included cutting a key interest rate, lowering the reserve requirement ratio for banks, and a plan to provide about $114 billion to stabilize the stock market. All these measures were aimed at putting more money in the hands of consumers and the economy itself. The announcement brought a period of joy for the country's stock market. Similar sentiments were seen in the shares of luxury brands. Shares of Hermès, Richemont and LVMH soared more than 15% in the weeks following the announcement, all in the hope that the stimulus may bring some relief to them. However, experts differ. Some analysts say that while these policies may boost confidence, many argue they fail to address the root issue of weak consumer demand. The Chinese housing market is in deep trouble, with widespread defaults and declining property values. Youth unemployment has reached alarming levels. Further ongoing economic conflicts, especially with the United States and Europe, are adding to uncertainty.
However, the monetary piece, the first arrow, if you will, didn't really speak to the trying to help any of the underlying fissures in the Chinese economy, which deal with a massive housing bubble that's in the slow process of unwinding, rampant youth unemployment, and basically economic stagnation. So the second arrow, the one that was announced today, is supposed to be all about fiscal policy and a lot about trying to, aid this sort of unwinding of debt. And there was just very little specifics, in my opinion. The Chinese government didn't really give investors a lot to work with today.
So it seems the hopes of a revival of demand for Western luxury goods might not materialize in China as many hope it would. And it may be best for them to find growth opportunities in other markets, or else they may fall into a similar cycle of boom and bust again.